Welcome back to Editors Roundtable. Recent data has suggested that the household sell-off has started. What does this mean for equities in the near term? Nimish is here with the details. Nimish.
We all know that Indian markets underperform Asia and US as well. We all know that the FIs have been net sellers in the Indian markets. But the big missing point is, what is the retail doing? And that's what my piece is all about. The retail, which is the smart investor, and they've been so much backing the Indian markets, they're actually like selling off. Now that's a worrying data, right? And historically, we've been proven that with interest rates going up, the retail flows into the equity market slow down. That's exactly what I'm looking at. So this is a number. Like India has underperformed Asia, US as well. Even if you look at the FI flows, the FIs have been net sellers in the Indian markets, 42,000 crores since the beginning of January. Well, the DIs have bought 36,000 crore. But the bigger question is, what does the retail money do? And the retail money seems to be moving out or not putting so much into the equity market. So that's the story, right? Historically, we've seen that when interest rates goes up, retail money goes out of the mutual funds, and that's exactly what I'm trying to do. This is a UBS data that I've picked up from. So if you look at the charts, that will explain you very nicely on how the retail money for the first time in September quarter has actually gone down. If you can just move the chart, yeah. So this actually shows that the retail money, the money into the mutual funds have actually dipped in the September ended quarter. It's never been the case for the last 2 years, and exactly now we have seen for the first time it's dipping down. Even if you look at the overall flows into the mutual funds, even that has peaked out from the highs of almost 1,200 billion rupees. Now it has come down to almost 600 billion rupees. So that's the equity inflows into the mutual funds. That shows that that's tapering off. The next would be even interesting data. This is a split between the SIP money and the non-SIP money. Well, the SIP money is still very sticky, and that's consistently been doing well. The bigger worry is the direct money that the retail money, retail investors put in. That non-SIP money is now slipping off. Like for the last 2 quarters now, we're seeing that the non-SIP money is now not directly coming into the market. What that technically means is the retail money, the so-called hardcore direct retail money, is shying away from the equity markets, and that's going to be the big talking point for the Indian performance. Remember, for the last 2 years, the big outperformance of India was backed by the retail money, and that's slowing off now, the direct retail money, and that's what is going to be the big theme for the end of this year.
Okay, Nimesh, thank you very much for that. Basant, would you be a little worried? We've been talking about how debt is now competing for flows when it comes to household incomes. Data is also supporting it, and this is not a 1-month data, right? This is something we've seen for the last couple of months. FIs are selling. If the money from the domestic institutional investors, retail, the family offices also taper down, would it be a bit of a problem for the Indian market?
I think if we had to crack, this was the best week for us to actually crack. The Nifty could have hit a circuit down, and I'm not trying to frighten people off. If you've survived this, it's like you've survived the first over from Curtly Ambrose. So you got a leg spinner now coming on, and you can add Barbados on a first day on a green top. So you've survived this, means you can survive anything. It's like Agni Pariksha for the Indian markets, and we have passed through it like Mata Sita.
Basant, I just want to, at the beginning you said India will only join what the globe is doing once we resolve this issue.
Yeah, but we will wait.
But what do you mean by that? Like, what is resolution?
Resolution means whatever has to happen, happens. So if the stock, instead of jumping for 60% up and falling 40% down, it just stays where it is. I mean, we cannot take a projection of where it's going to stabilize, but I know and you know where it's going to stabilize. Whatever has to happen should happen, because I've realized in the market that there are times from where you can pull a game off. This group is slowly falling into that situation where if it doesn't happen next week, it might not happen very soon, because you don't let a situation get out of control like that. On the FPO day, I said it publicly. It was like, शाम को घर में शादी और दिन में 3 बजे लड़की नहीं है घर पे. Your FPO is not getting subscribed. They should have used all their money and got the FPO subscribed on the first day. If that didn't happen, it told you that there's something more to it than what you and me can see.
But Agni Pariksha pass kar diya, right? That's the bottom line from this week. But thank you very much, Basant, for joining in. This has been an intense week for all of us. Have a wonderful weekend. It's a wrap on this edition of Editors Roundtable.